Business time now. Brian Quinn with me to look at some of the top stories. Hello there.
Okay.
We're starting off with one of the world's most talked about companies, probably Uber. And recently it's not really been for necessarily the reasons that they would have liked. However, they've got financial results coming out today and they look surprisingly good.
Yeah, the company has definitely had a pretty rough year from a PR standpoint. A number of complaints about internal sexual harassment and public infighting amongst leadership that's seen Travis Kalanick forced to step down as CEO. Now, in spite of all that, Uber's financials are looking better than ever, but they are still losing money, as Julia Kim reports.
Uber may be mired in a flurry of scandals, but that's done little to dent its earnings. In the 3 months to June, the ride-hailing app posted a staggering $1.75 billion in net revenue, up $250 million from Q1. Net loss also fell almost 9% in the same period, dropping to $645 million. More users than ever are hailing Ubers. Worldwide, the number of bookings shot up 150% year-on-year, and gross bookings rose 17%. These are reassuring figures for a company that's still without a CEO, chief financial officer and chief operating officer. But despite trimming its losses in the second quarter, Uber is still losing cash to the tune of $600 million. That's still less than the $708 million loss it posted in Q1. Its shrinking cash pile is worrying investors. In a bid to win global market share, the Silicon Valley startup has subsidized a percentage of passengers' fares for the past 8 years, a business strategy that many say isn't viable.
All right, well, our next story is from Brazil with plans for a pretty massive privatization of state assets.
Very large plan. In fact, the Brazilian government set to auction off ports, highways, and other public assets in an effort to raise revenue and encourage investment in the country's infrastructure. Brazilian President Michel Temer is trying to shift the country's economic policies away from the more leftist direction of his predecessors while he remains mired in a corruption scandal. Brazil is struggling to emerge from its worst recession in the country's history, budget deficits of nearly 10% of total economic output. Part of the revenue-raising plan includes selling off a controlling stake in Brazilian electricity giant Eletrobras. Brazil's energy minister defended that deal. Let's take a listen here.
A new company is emerging with this privatization process. I believe that it will modernize Brazil's infrastructure and the energy sector.
All right, trading has now begun on the stock markets here in Europe. How's it going?
Well, European markets opening higher across the board as investors look ahead to comments from central bankers at Jackson Hole, Wyoming earlier today. Slight gains on the FTSE 100 in London, the Paris CAC 40 over here, and the Frankfurt DAX. Over in Asia, those indexes were mixed in Thursday trading, apparently avoiding most of the damage on Wall Street yesterday after Donald Trump's threat of a government shutdown. Hong Kong's Hang Seng Index up around 0.6 as it reopens after closing for Typhoon Hato yesterday. The Nikkei in Japan down around 0.4 as tech stocks slip there. Well, let's take a look at some more of today's top business headlines. Britain's food industry is sounding the alarm over possible labor shortages under Brexit. The UK Food and Drink Federation says 31% of businesses polled in a recent survey had lost European workers and that nearly half the European nationals working in the UK are considering leaving. The industry group says that could leave a third of food businesses in the UK inoperable. It's calling on the government to guarantee the rights of European nationals to stem that exodus. Go Voyage is moving its offices to Spain. The French online travel agency has announced it's eliminating 75% of its jobs here in France. 82 out of 112 positions will be relocated, with French employees having just weeks to decide if they will move to Barcelona or lose their jobs. And U.S. new home sales hit a 7-month low in July. The U.S. Commerce Department said sales were down nearly 9.5%, defying economists' predictions of a small gain. New home sales are falling, but prices are rising, up 6.3% from 1 year ago. That's far outpacing U.S. wage growth. The figures are raising concerns of a general slowdown in the American housing market, which could be a drag on overall economic growth.
Right, well, we've just got time for one last business story and someone who's buying something rather more expensive even than a house.
Yes, we've talked before about what Donald Trump could be worth to Twitter. One analyst estimating the attention that he brings into the microblogging service could be worth $2 billion in market value. Now there's a campaign to purchase the site for the express purpose of kicking Trump off. Valerie Plame is the former covert CIA officer whose cover was blown in 2003 by the Bush administration, that after her husband contradicted their theories on Saddam Hussein's supposed weapons of mass destruction. Well, Plame is now launching a crowdfunding campaign to try and buy Twitter with the sole purpose of banning Trump. She says his tweets are damaging the country and risking nuclear war. Her goal is $1 billion to buy a controlling share of the publicly traded company. Bloomberg, however, pointing out that a controlling share of Twitter would actually cost closer to $6 billion. In any case, we probably won't have to worry about that. As of today, Plame has raised just over $31,000.
Maybe that's just the beginning, though, Brian.
You never know.
You never
it's
know.
ongoing. We'll see where it goes.
Thanks so much, Brian Quinn, with our business update there.